Well, joining us for this very special discussion is Mr. Rahil Rangwala, who is the Director of India Programs at the Dell Foundation and looks into financial inclusion as well as livelihood-related grants. Thank you very much for joining us today on Your Story TV. I just wanted to understand, how the year 2020 has been, because of course it has been challenging for most businesses. But you, as Dell Foundation, what have been your insights into the year?
Hey Priya, thank you so much for having me. We're starting with sort of the crux of the issue, and this question's a good one. 2020 was a whirlwind of a year, I think, for everybody, and I think for the philanthropic space and the sector that I work in, it was perhaps one of the busiest years I have. I've been in this sector for a decade. And the demands and the needs of many kind of overwhelming. So it was definitely a challenging year. From our perspective, if you look back and sort of the lessons that we had in terms of how for this challenging crisis that we had, I think there were three big things that we took away from it. I think speed was critical. We had to move quickly. To make sure that the people who were in need got some sort of support. The other thing that we had to focus on was we knew we couldn't do this alone, so collaboration was sort of the name of the game. Working with many partners and making sure that we could maximize and stretch the impact of the money that we were investing was very important for us. Speed and collaboration were two big things. And then the third thing I would say is just resilience and sustainability. How do you build this also with a view of building something that's sustainable going forward? I think we have to take a long-term view as well. So those were sort of the three things that, for me, are the lessons that we took away from last year.
When you look at the different areas that you all really support across the board, which according to you have emerged as the most critical areas for the need for development? And if you could, highlight as to, is Dell Foundation already working on that journey to really help empower those parts of society?
And I think the two biggest things that stand out for us as we come out of the pandemic, one is education. Investing in the youth and the children is critical. And the year that we had, people have just taken a break from learning, right? With schools being shut down, online education, with a large number of people in government schools with limited infrastructure, that has not been as successful as we wanted. Some of our partners in the states we work in, they went very far in ensuring that students were connected. But we all know the impact of that will linger for many years. I think education is one of the biggest focus areas for us. It has been in the past and it will continue being in the future as well. The other massive area as we go forward is the informal sector, which is the lifeblood of the Indian economy. This is a sector that the MSME sector drives commerce, it drives employment. 85% of the labor force is employed in the informal sector. And that was hit the hardest. We are recovering in some sense from our unemployment rate, but we've kind of plateaued a little bit in December. And the economic recovery it depends on the informal sector bouncing back. So supporting this informal sector, supporting the gig workers, supporting the micro entrepreneurs, getting back to where they were pre-crisis is very important to us. So jobs, getting people back to work is the other second important thing that we're focused on.
Road to Recovery is one initiative that you all have been really focusing on. And when you look at the small businesses that you spoke about, the informal sector, they've been the most hit. So what, according to you, could be some critical elements that could come in from the government's perspective as well to help this strata of society? So, partnering with you and with some support from the government, this could help these businesses.
So I think the government is doing a number of things in this space. Even last year, I think they launched a large number of efforts for the informal sector. When we talk about micro entrepreneurs, there was a very large stimulus in terms of guarantee and liquidity that they pushed into the system, that banks became the anchors for, to release that liquidity so that micro enterprises would get capital. There was the guarantee scheme. There was a number of things that happened in that space. The MSME sector is not homogenous. And a lot of times when people talk about MSME, what ends up happening is the easier to serve segment, which is the small and medium enterprises are served. So they tend to capture a lot of the liquidity, a lot of the focus, a lot of the conversation. And 99% of that MSME sector is really the micro enterprise, which are these really tiny mom and pop shops. And that's a very hard segment to serve. So I think it would be helpful if there is a much more directed focus on micro enterprises, micro entrepreneurs, nano entrepreneurs who are even smaller than them, so that there could be a much more intentional and directed effort to lift them out of the crisis that they're in. So that would be my one suggestion that maybe we can do going forward. The other thing that is a bit of a, the other big part of the economy is the informal sector, informal workers in the economy. And the government has a large number of schemes in terms of benefits and social security benefits for this segment, but it never reaches the last mile. And there are various reasons for why that is. And one of the big issues is that there's just no good way to identify and enumerate these beneficiaries. And this is where I think nonprofit partners and the development sector can be a good partner for the government, because we can help support, make that last mile connection and the linkages, so that these very large schemes that are well thought through and well developed can actually reach the last mile and have the impact the government wants them to have.
Just for the benefit of our viewers, just run us through what has been the kind of investment that's been made so far by Dell Foundation. And as we enter 2021, what is your kind of outlook in terms of what kind of grants do you think you could provide as far as overall society is concerned?
I think, you referred to sort of our Road to Recovery initiative last year. And under that initiative, we did a number of things. And, just to give you a few sort of top headline numbers is, we committed around 93 crores last year, and we leveraged that to up to around 570 crores that should impact the lives of 5 million micro entrepreneurs and informal workers, such as gig workers. And that was part of the Road to Recovery initiative that we had. And a couple of examples of what we did in that Road to Recovery initiative. I think one of the things that we saw was very important was we did two big things. One was we knew that there was an immediate need for getting sustenance cash into the hands of those affected by the pandemic. I mean, overnight people lost their livelihoods, right? And it wasn't a question of numerous complex interventions. They just needed money to get back onto their feet. So I think we partnered with large platforms. Give India is one of them, and through them we worked with a partner called Haq Darshak. And what they did is on the ground, they worked with the target segment, whether they be migrants, whether they be informal workers, to ensure that whoever was entitled to get access to government benefits, they registered them for these schemes, and they ensured that the money reached these different actors, right? So, just to give last year alone, Darshak helped around 37,200 beneficiaries. And, and in that 1 year, that our intervention kind of unlocked roughly around $2 million, just in terms of 1 year's benefits. But if you look at the lifetime value of that, at a conservative estimate is around $8 million. So I think that's a very impactful way of engaging, where these are things that they're entitled to, but they just don't have the right access because they may not be registered, they don't necessarily have the right paperwork, or they don't know where to apply for these things. And that's the kind of on the ground kind of sustenance interventions that we saw were very important. Another thing that we did from a sustenance perspective that really flows into sort of the longer term resilience and recovery perspective is we worked with Samhita, or the Collective Good Foundation, on the Revive platform. And over there, what we did is really thinking about how do we bring in a blended finance model to increase the impact on the ground. And the approach over there, I mean, we could have just done a grant, right? Let's say Rahil needs, 1,000 rupees to get his business started again. Someone gives Rahil a grant and Rahil gets working again. And that's great. That's great impact. I mean, we're getting one person back to work. That means a household, he or she will hire people. That's huge impact. But how many Rahils can MSDF, the foundation, support? And we were limited in terms of our reach, our budget. So what we thought is that how do we partner with people and create leverage on the money that we had? And with Samhita, we've worked on a returnable grant model where there is no legal obligation to repay. It's not a loan. It's essentially a moral obligation. So the idea here was, instead of just giving Rahil a grant, you give Rahil like a grant which is returnable after Rahil gets back on his feet. So that's with the built-in moratorium period, with no interest, none of those expectations, because as we're getting out of the pandemic, those are not easy things for a large segment of our society to be able to support. The businesses don't do that. So for example, and what that does is that, once the money comes, like people have the opportunity to pay it forward. So it comes back and we hope to be able to then, for every rupee, we can do 10 returnable grants. And our role in setting that up was, we said, look, this is a great model. This is innovative. This can have large leveraged impact. What we will do as a funder is, instead of our money just going out as a grant, let us offer this as to other funders who are interested in working in this space. So let us crowd the money in and let's create this large platform so that if for whatever reason in the first cohort, let's say 10% doesn't come back or some percentage of that money, because we don't expect everybody, because everyone will have different challenges. Funders like ourselves can step in and top up that pool. So if a CSR funder, whether it be Godrej or Arvind, whoever that may be, is interested in working with a segment of society, they can do this grant to them with the expectation it comes back. And if it doesn't, MSDF will come in and cover up and do a top up. So by doing that, Godrej, Arvind, they get leverage on their money. We are able to crowd in capital. And it creates this new model of revolving capital, which I think is, which builds on itself and can have multiple impact. And we sort of started with this fund initially. I want to say, I think earlier, we thought the fund would be roughly around 20 crores, less than 20 crores. We're already at 50 crores at this point, right? So this platform has been able to really garner a lot of interest, and it impacts farmers, it impacts textile workers, gig workers. It's a wide variety of the ecosystem. Another example of what we did last year was, sorry, one second. Another example of what we did last year is, we knew that the kind of capacity that we have, philanthropy itself can't really solve for this problem. And we need markets to also step in. And, we learned our lessons in the microfinance crisis in Andhra. This was, at that point in time when the crisis hit, banks and everybody stopped lending. It caused a liquidity freeze in the market. And even customers or microfinance institutions that had good standing weren't able to refinance their loans. As a result, they couldn't give loans to customers. And customers, when liquidity dries up, businesses are hit directly, right? And that caused a lot of pain, unnecessary pain, even though there were very stable businesses. And we've seen that once someone goes into bankruptcy or once someone goes into delinquency and their CIBIL score is impacted, then even as the recovery comes in, when they go back for another loan, they can't get that loan. So we needed to act to prevent that from happening. We couldn't have the liquidity cycle get crunched and make something that was bad even worse. So what we did is we stepped in and we said, look, there is a high risk perception in the market. So we stepped in where other commercial funders couldn't lend. And we told commercial funders, we will guarantee your capital up to a certain point so that you can start lending again. And specifically lending to a segment, which is the micro enterprise segment, the microfinance segment, the segment that's the missing, the missing middle, which is completely excluded when it comes to financial inclusion. So we've used different forms of capital last year to basically build out this large leverage impact that we were hoping to have. And we've been fairly successful in doing that, in collaborating, crowding in capital, both philanthropic as well as commercial capital, to have the impact that we wanted to do. So that's just a few examples of what last year looked like. And I think that was your first question. And your second question you asked is sort of next year or this year and going forward, right? I think for us, going forward and next year, it's all about continuing this theme of resilience. Where people are and where people, need to go, there is still a big difference. We need to go even further. Like, we're not fully out there, but we're still building resilience in the system. One of our biggest priorities is just getting people back to work. The economy depends on that. I mean, the informal sector and the micro enterprises really need to get back and be humming. And there's a huge opportunity of just getting people back to work. So a large amount of our investments are going into skilling, upskilling, our credit investments and these platforms that I was talking about are 3 years, right? So these are going to continue building on itself this year. And we want to continue this theme of collaboration that we started last year. How do we continue working with our nonprofit partners? How do we work with the government? How do we work with market actors as well? Where what they do in sort of the market space is very good, but how do we bring in the additional catalytic capital to close the gap, to make those interventions much more real and impactful with the lens of targeting to the poor, right? That is what we bring, and that is the difference that we can bring to the table, because we know this segment really well. We've been working in India for 15 years. As an investor, we've been working with microfinance organizations for over a decade. We really understand this segment. So we can bring that to the table along with our capital, of course. But that perspective and putting the customer at the center is what we want to bring to our collaborative efforts, whether it be with the government or with commercial actors.
A final question before I let you go is basically on how a business can really reach out to you, a business that is in dire need for capital. How can they reach out to you?
So, look, we are not, when you say a business, like there are many types of businesses, right? There are very small micro enterprises on the ground. These are businesses. And then there are, larger organizations of the...
I'm talking about the smaller businesses that have perhaps faced, issues over the last couple of months.
So we are really not a implementing organization. We're a funding organization. So we're not on the ground. So the organization, we don't have the capacity or the capability to actually engage with these micro enterprises on the ground. What we have though is our partners actually have a bunch of these interfaces up to engage with that. And that is very specific to geography. So for example, if you want lending, then our lending partners are on the field. They're different by state. So what is happening in Gujarat would be different from what's happening in Karnataka versus what's happening in Haryana, right? We don't have one way for that to happen. But if you're talking about, we do have partnerships with organizations that provide jobs. So for example, if I think you're looking for a job in a blue and gray collar space, I would recommend that you go to one of a partner called WorkX. They have today 50,000 and more employers there across the country, we've seen tremendous impact in how quickly they've been able to place people in work. If you're thinking about upskilling and you're trying to get better skilled in something, and in spoken English is, I think, one of the biggest key barriers to connecting you to that aspirational job. I would recommend looking at NGuru as a solution for spoken English, as well as their live classes. So I think depending on the specific need, we can definitely make the connection. But really, it's our partners on the ground who do the work. We're just lucky enough to be part of their journey and support them in their, as they have incredible impact in the field.
All right. On that note, many thanks for joining us for this discussion. Thank you so much for being a part of your story. Thank you so much.
Thank you so much, Priya. This was really enjoyable. Thanks.
Thanks. Yeah.
Bye.